All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor. Drop me a 1 in the chat. Let me know that my sound is good, no technical issues, and we are all ready to go. I see the good mornings coming in. I see the 1, so I am good on my end. I appreciate it. So let's always remind ourselves that each and every day that we need to start taking massive action as we approach these markets. Let's make sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. And let's trust in our education, strategy, trading skills, and intuition. And let's always imagine our trades successfully materializing. Let's obey our trading strategy, avoiding decisions based on greed or fear. And let's make sure that we are never looking back or stopping once our trade has commenced. So I hope everybody enjoyed their weekend and that we are ready to do exactly that, take massive action as we approach this Forex market. So let's jump out of here and move on over, right, to the Forex factors where I want to start this morning because, right, the market is kind of grinding along, and one of the main reasons why, right? So first week is kind of, we had the holiday here in the United States, the 4th of July that took place last Thursday. Then moving into Friday, the markets are usually pretty slow, but we did get a decent non-farm payroll number that came out, but everybody is waiting, right? So you wonder why the market is just creeping along. For one, it's summer, but for two, starting today, right, at 10 a.m., we have Chairman Powell testifying, right, a semi-annual testimony in front of Congress, right? So everybody's waiting to see what Chairman Powell has to say. And then we also have other FOMC members speaking throughout the day. At 9:15, we've got Barr speaking, and then we've got Bowman speaking at 1:30. So a lot can be said, things that can move the market, especially during Chairman Powell's testimony. It is 2 days, right? So it's happening today and Wednesday that he sits in front of Congress. Then we also have today at 10 a.m. Also Treasury Secretary Yellen speaking. Okay, so a lot going on, especially as it relates to the dollar. And then later on today, we've got the official cash rate for the Reserve Bank of New Zealand. The expectation is for them to hold. So, of course, we are always looking at what the forward guidance is going to be. Is there going to be any change in the rhetoric, any change in regards to the forecast for when the first rate cut may come, right? As we know, with the New Zealand dollar, before, they were talking about estimates, forecast were for the first cut coming in 2025, but there's been some things that have changed that have people believing that it may come sooner than that. So we'll look to see if we get any clues later tonight as we look into the rate statement from the Reserve Bank of New Zealand. And then we have on Thursday, right? So jumping ahead a little bit, talking about the United States, right? On Thursday, we've got core CPI, right? So you may see the market kind of bounce around a bit, not get a ton of price action because of that, what's going on, right? Testimony from Powell, and then we've got core CPI coming through for the United States. So everybody's kind of wondering when we're going to see that first rate cut from the United States as well. But we don't want to overlook that we've got GDP numbers coming out on Thursday as well for the UK. So lots of important things this week, right, for currencies. So we'll continue to see what's going to happen and if it can give us some volatility because we need it. Moving over to trading economics, European markets are in the red. European equity markets were lower on Tuesday as investors continue to assess the impact of potential political gridlock in France, right? France player in the Eurozone, right? So it matters. Traders also await Fed Chair Powell's testimony before Congress later today to assess the monetary policy path. Australian consumer sentiment weakens. So we know the Australian dollar has been running pretty tough to the upside, right? It's been strong, right? Probably the strongest out of all of your major currencies as of late. But we got some cracks in regards to consumer sentiment. So we'll see if we're due for any corrections. And then we've got Japan, the Nikkei, right? It's our new all-time high. So things keep rocking and rolling with these indices in these markets. So we will take a look at that, right? Any questions regarding the fundamentals so far?
Yeah, Benny, I've seen a lot of news about China. If when they're talking about China, should we be looking at the Australia?
Yep, that always has the ability to impact Australia and New Zealand, right? Because though China's their largest trade partner. So we definitely, what have you been reading about China lately?
Um, Yesterday, they made a decision on the rate cuts or something. I didn't. I just seen the
Mm,
notification on my phone. I didn't go to the story, but then later on that evening, they was talking about. I had got a news flash about China too, and I didn't wake up this morning to read everything. But I started seeing a lot of stuff about China yesterday.
got it, got it. So yeah, I'll have to catch up on that too. I'll have to check on Bloomberg to see what we have, right? China continue maybe to, to continue to try to stimulate the economy to keep it moving, in the right direction, right? It keeps bouncing back and forth. So we'll take a look at it later today when I'm going through a lot of the articles to see if I can find anything as well. And then just make sure, right, if you find anything too, post it in the community so we can read up on it. Appreciate you, Joy. All right. All right. So that's that there. Moving over, right? Take a look at the look at the heat map, right? As we move into our trading week, right? Silver still running to the upside. NASDAQ and the Nikkei, we talked about that. Copper, right? S&P Platinum, look at it. Gold, right? And so the Aussie still in green. Look, you've got these pounds, right? Starting running pretty hot. Okay. Look at that. Your pound pairs. I want to take a look at some of these Swissy pairs because some of them look like they're due for a correction. So we may be able to take advantage of some plays there, right? And yeah, so you see the UCAD here in red, dollar Swissy red, Euro GBP. So we'll look at those from the top down. Of course, Bitcoin continues to move to the downside, negative 8.7%, right, on Bitcoin. So we'll take a look at some of these pairs. So pound and a Swissy running together. What you mean by that, Joy, in regards to that both moving to the upside, right? What do you mean?
I noticed like a lot of times when it becomes because I noticed it became risk off sentiment. Yesterday I did look at that. And I noticed when it's risk off, the GPP gains strength. The GPP and Swiss typically gain Swiss strength, and then AUD and a lot of commodities start losing strength because gold was number one, and now gold went down a little bit.
Down a little bit. Yeah, yeah, yeah. So you've got some things going on, especially in the years on with some of the things around politics and things like that. But I think things will probably shift back to risk on. I know that the pound acting a little bit as a safe haven, right? Because they've had their elections, the Labor Party uh came through. So when you talk about the political situation over there, there is a bit of stability uh, with the UK, right? So that's playing a part too. And like you said, that Swissy um, kind of showed a little bit of strength, but that's I have to delve deeper into, like you said, could be kind of that risk shift, temporary risk shift, or some of these Swissies, right? It's been weak for a while because of the two rate cuts. Sometimes it's some profit taking going on and things like that. So we'll take a look at it as well. So I appreciate you bringing that up. So starting out, are there any, before I go into what I've got to go into, are there any particular pairs that you all have in mind that you want to take a look at right away? Not I could just dive right in and take a look at some of the setups that I'm keeping an eye on. You see, pound dollar, okay, USD. All right, so just watching those quant box videos. Yeah, Wayne McDonald's pretty good. He's been around for a while. Like I said, he was one of the gold, one of the first ones. Like if not, like I said, I think he might have been like the first one on YouTube with trading. He's been on there quite some time. All right, so let's start out. Let's take a look at the pound dollar first as we go, but we'll look at the DXY, right? And so just keep in mind that we do have Chairman Powell speaking for the next 2 days and other FOMC members, and then we've got CPI on Thursday. So we might not see too, depending on what's said, we may get a market reaction. Who knows which way? But we know that the dollar, right, had turned over and started to decline off the highs, right? And now you can see how we're kind of just settling down, right? Our stochastic is back in the buy zone. So technically, we could see a shift. And we can see like if we come down to the 1 hour, right? Not too much, right? Not too much. Kind of just moving around in that range on the dollar. So we'll see what happens. We need some sort of a catalyst to get it moving again. And maybe some forward guys from Chairman Powell will help today. But we can see here that this is moving, right? Because of the recent weakness in the dollar, then we've got that strength coming out of the pound, right? This is moving bullish. We're getting a little overextended, right? So we've got yesterday's high, right? That came in, what is that? 128.45. So let's see what happens today. If we could take out that high, if we do, then we look for a continuation higher. If we come down to the 4, we see here where we found that support level. 4-hour stochastic is in the buy zone, and we're sitting up here in this 80-20, right? So right now, this is still fairly bullish, right? We'll see what happens today. Here's that high, right, that we're talking about. So we're kind of moving sideways. We are in an 80-20 zone on the 4. But with a lot of these dollar pairs, man, I don't, I'm kind of just in a wait and see mode because we've got the Fed Chair Powell speaking today. So overall, bullish. Is this my ideal area to buy? No, not for me based on these fibs. I would like to see it come down. But you can see right now, early part, right, pre-market, we've got some bullishness coming off this level. This 128 level seems to be holding pretty good, right? And so again, there yesterday's high, right, we run that trend line down, you can see we've broken. Okay, we put in a low on the 4, right? We're putting in the low on the 4, so we could see a continuation. But I'm gonna, if you've been holding along on this, right, continue to hold it. But as far as a new trade setup, I'm gonna leave it alone for now because we've got Chairman Powell speaking over the next 2 days, and then CPI on Thursday. So overall bullish, this 1 hour is off of 382. Right. So maybe we take out that high and hit that extension. I'm not sure. But I don't have a particular play right now on this pound dollar, besides the fact that it's been long, right? Coming off daily support for quite some time. Right. But no new setup, no new entry for me right now on that, right? So daily stochastic is overbought at 98%. Right. I'm on the daily here now, man. Right. So we're above that 128. We're holding above that level. Right. My vertical line is right here. Right. So if you want me to put a new one here, right? Where we're coming into these highs, right? There's that daily high there. Yeah, right there. Right. So we could, continue, but never know. A change in the rhetoric from yep, that's what you wanted. Okay, cool. So a change in the rhetoric, from Chairman Powell can turn things around. So definitely we see it with our own eyes that is bullish. We'll see if it if it wants to continue, right? So here's a I don't know why I don't have that level marked here. So maybe we push, right? Maybe we do run past that high and we push to test that 128.59 level here. Like so. All right. So we're long, right? Pound dollar long. If we come down, uh take a look at our heat map. Not what I want to say. I wanted to go to the scorecard summary, right? So you can see we're long, right? In the green. Okay. So I definitely want to, look for continued longs, but didn't really get maybe on the lower time frame, it represents itself a little bit different. But you go down to the 15. Maybe so we look like on the 5. It's just kind of funny because of the way it moved sideways and then it broke out a bit. Yeah, so even on your 5 minutes. So yeah, nothing doing right now for in regards to a new setup. So for me at least, and how I like to trade it. So that's the pound dollar. We also wanted to take a look at gold scorecard along with the fundamental sentiment. Yeah, that scatter plot is pretty cool. Right. I like this because it just provides good, really, really good visuals, right? Uh, take a look at the home page there. Right. And then right, so we can sell, right? That pound dollar is in there hovering. Look at silver, everybody. Look at that. Right. That's running gold, right? So let's take a look at gold. Right. Okay. Overall, right, it's been pushing long. We are right a bit overbought on gold, right? So it's just a matter of, hey, you know, when can we get an opportunity on it to go long? I'm still interest rate cutting environments. I'm still liking gold, you know, to the upside. We're putting in a support here, right? So that 2351 level. And so we can continue to see gold push from there, but still within this 4-hour AB boundary. Here's that latest leg to the upside, right? Making higher highs and higher lows. So if we come here, right, you can see where it's finding that support on gold to look for a continued move, right? So if we're running right, off the low, that's where we are right now. Okay. So overall bullish, right, is loving the support. That 2351 level is holding pretty good. It's holding above that level. So overall, still bullish. This is a matter of setting your game plan on where you want to take it when you want to take an entry, right? I would love to see it eventually move back, right, into the buy zone, right? Sticking to the rules, especially since, right, we're way over here on the daily, right? I'd like to see that correct a bit to get a better price, right? But I like longs for gold still. Okay. This is the daily right here.
Do you
Okay.
have I seen when I ran my fields, I had an 80/20 on the daily, and I just make sure
Uh,
my fields was right.
you probably do that because it's been running pretty good. Let me plot a low and then run it. That's what I got there.
Okay, I must got an old field running off the smart field. Okay,
The smart thing. Well, let me put it on and see what it had. I just ran it from way back and brought it forward. Sometimes they
they've been
do it
they've been
more.
off.
It's the same one. Yeah, it's the same one. They've got the same one I've got running
Okay.
on a daily. So you might have just missed a low that was a little further back. That's all. That's all. But and I do that sometimes from time to time. I don't go far enough back. So hold on, somebody. Oh, never mind. Okay. So this is where we are. So overall, still moving bullish. It's just a matter of like we want to see a correction to a low price if we can get it, right? Depending on the time frame you're on, but still moving to the upside overall, right? You can see we took out the high at 23.87, then we pulled back. So I still just fundamentally with everything that's going on, I still like uh gold long. Any questions on that? Nope. All right. Any other pairs in the chat that we wanted to look at this morning? Oh, NASDAQ.
Sure.
Uh, you said the Aussie Swiss too? Okay. Swiss two. Done that, put the NASI on there, so we'll take a look at that. Then we'll go to that Aussie Swissy. Because I've got my eye on quite a few of these Swissy pairs. So let's look at the NASDAQ. Okay. Man, just running hot. Look at that. Just smashing through levels. Now, I don't know if if I'm running the country and I've got record low unemployment, record numbers of jobs created, an S&P 500 that has doubled, avoided a recession. I don't care how many bad debates I have. I don't think I would voluntarily step down from my office with these type of numbers. Like this is running. So I think stuff will start to subside a bit here politically in the United States because I don't know who would do that with these with these numbers running like this, right? The, I mean, this is crazy. So I don't I don't see that happening, with all the crazy shenanigans going on here politically right now. Both sides is some hot messes, but they need to get it together because this is crazy what's going on with the stock market right now. Right? So just all the rhetoric with President Biden, people even on his side, on the Democratic side here, saying he should step down after he had the bad debate performance. But I don't know if that overshadows or should overshadow 3.5 years of some pretty good numbers, right? If we take our political hats off and just look at the data, right? No matter what party was in power, if they had this type of numbers, with these type of numbers, I don't know if you would be talking about stepping down, regardless of what people think, in regards to health issues and all and all of that stuff. This is pretty good. This is pretty good. All right. This just keeps running and running and running and running and running higher. That's hard to deny. Right? It's hard to deny what's going on these charts in regards to the market, especially, being that, people's retirement plans are tied to the market. And right now, I know I'm not complaining. Right? No, no, I'm not complaining. So yeah, we'll see how that continues to play out. And I bring that up because we come into the year and we said that there's a record number, of Democratic elections across the world, right, this year. So we have to pay attention to that. I don't care what side of the aisle you may be on, wherever you are across the globe. But as an investor, it does have an impact, right, on what you do. We saw the impact what was happening in Europe, and how the market reacted and how it reacted uh with the elections in the UK. So it's very important, right? It's very, very important um, in regards to your money, right? Okay. So overall, just bullish, right? Coming into an extension, just continue to run long. Like we're not even getting huge corrections, everybody. We're just not, right? Look at that. That's right. We may hit that extension before we see any type of correction to the downside. Now, again, right, when we think about what can make it move, we got Chairman Powell speaking. We also have, so we're going to see if he provides any more forward guidance, any change in the rhetoric. But at the end of the day, we got CPI data coming up on Thursday, so it's going to be what it's going to be, right? Numbers are pretty black and white. So we'll see what happens on Thursday, if that creates any correction or if it just continues to push the market higher. So think about it. If we get a CPI report that shows that inflation, right, is continuing to come down, right? Continuing to come down, you can see the market put rallies in, right? Because they're thinking if that data continues to support the Fed cutting rates earlier than what is right now projected, that's going to be positive for the markets for the most part, right? Unless there's something that's, once they really read between the lines, and the data, is not what they expected to be at this point, right? Then that'd be a different story. But if we see that comes down, especially if it comes down significantly by a significant amount, then we'll see these markets continue to rally. Right. But at some point, right, with it approaching these extension levels is already overextended, it's already past a lot of, at some point, regardless, we should see some sort of minor correction at least, because there should be some profit taken, right? These levels are getting pretty high. Any questions on that? And said, he is. He is. He is. But his opponent is 79. He 81. Like they're both old. So exactly, right? You only as old as you feel. And I tell you what, when you look at overall performance, it don't look like he too old in regards to the way these markets are performing and the way this economy is going. You know, I mean, hey, I don't know. I don't know what it is with us here. Both of them are old, but it seems like in other countries and things like that, people respect their elders a lot more than what we do here in the United States. That's a lot of wisdom, you know, out there, because you haven't seen as many bipartisan bills get done, big bills get done in a long time in the United States. So it's a lot that's been done, which is why the market is responding the way it's responding. So I'll take that wisdom any day, right? Because you can also end up with a young hot mess too. So I've never really paid too much attention to the age factor. Because both of them are up there in age. So we could call that even. So looking at this Nikkei, right? Or the Nikkei, it may be concerned about his health and need to retire despite what other people want. Oh, yeah. Well, we have we got checks and balances for that. They have VPs, vice presidents for a reason, So if it should come to that, right, it's not like that seat will be left vacant by any means. I just know historically, right? Historically, on either side of the aisle, any party that has had a president in the United States that has stepped down, decided not to run again, stepped down, they've lost. So I just think strategically, it's stupid. I don't know how else to say it. You know what I mean? I tend to lean on history. So at least that's how it's worked here in the United States. Like it's right. And so late in the game, I just think it's a I just think it's a dumb idea. I don't think it would be, and I'm mainly speaking about it because of the market impact. I don't think it'll be good for markets at all. I just think it's dumb all the way around. So, but the Nikkei, right? Look at it, moving bullish, right? Look at that, right? Moving, just continuing to push long, right? Look at this correction and then just continuation, right? I gotta finish marking up my levels on this, but just moving big time to the upside. Okay, we can look at our 4-hour chart, and look at that, right? We're probably gonna hit that extension of hardly any correction. So the markets globally, right, as we come down, take a look at the S&P, right, 500, which is what I really need to get back in the habit of starting that day off with this after taking a look at the DXY, just go straight to the S&P, right? Because it has such an impact, across all asset classes. But looking here at the S&P 500, yeah, exactly, Donette. That's why I've never paid attention to that age thing. Like what? Like, I mean, it makes no sense to me, especially now doing this. I mean, my great grandmother was nine, like I think she finally stopped getting her license renewed. I think she was 92 or something like that, and then up until she got super ill, and passed away at 99, she was still doing her thing. I would go around, she's up cooking breakfast and doing everything else in her 90s. So I'm just like, I don't, it's the age discrimination, in this country is really, really bad. It's really, really bad. Right. So uh I wish that would change. Um yeah, yeah, yeah. I mean, even Reagan in that second term, was older. So yeah, we'll see. We'll see what happens here, but we definitely have to keep a close eye on that, like I said, because it will have a market impact. So the S&P on the daily, we've got um, a new fib running, but you can see how it's just pushing along, right? And how we've been watching these levels, right? So if I take that fib off of there, right, you can see this is beautiful here. So if you're just using, we talked about it over the weekend, right? Just naked charts, right? This here is a really good breakout, right? So if you like trading breakouts or if you heard about them and you wonder what they look like technically, that's a really good breakout, right? Really good breakout. Okay. So different game, different strategy, but that right there, that breaking that close above that 55.24 level coming out of that range, that's a nice move there. Right. So still pushing bullish. Okay. At some point we'll see a correction, but right now, this market is not playing, right? The bulls are in control. Right. So this is going to head to a D extension there on the 4. We're going to get a reset. So the last correction we had, major correction we had, was way back here, right? Where we got that deep pullback. We got that inner and outer trend line break and that move up. And we didn't get any correction here. Haven't really gotten one here, right? So we had started even to draw that range out, right? That we had another one on the 4-hour here, right? And then you see how it just broke out to continue to move long. So that's the S&P bullish coming into some extensions on the lower time frame. And so we just have to be patient and try to wait to get the best type of entry that we can. Like, look at that. Look at that breakout. Right? That's true, don't that? That is true. That is true. Right? So I've never had like I said, an issue with the age thing. It's just it just comes down to policies, right? And the overall health of the economy, and what is it comes down to what you value, right? And what matters to you as a voter. But the age thing, they need to stop talking about that. Uh, yep. Okay. So there's the S&P 500 there. Take a look at the US 30. Right? Just just hovering, right? Look at that. At these levels. It's been messing around at these levels for a long time. But overall, right, we have to still say, neutral to bullish. Said wait till they get old, a vicious cycle. You got that right. You got that right. And so here we are on the US 30 on the 4. This was a good one, right? So sometimes the market, it gives us exactly what we want. Like, so whereas, some of the other indices we just looked at, there hasn't been really any corrections in the near term. But this one gave us a decent correction. This is what you look for, right? So if we're looking at that classic swing trade setup that we like, look how it swung into your buy zone, right? You put that stop below the A, and then look how it's moved in your direction. So we've got some sideways movement now, but you can't do anything about that, right? All you could do is identify your trade setup, where you like to enter your sweet spots, and then pull a trigger, right? You had an 80-20 here that you could have played to the downside, right? So this really keeps it simple, right? Okay, I'm bullish. So you can use, right, your quant box, right? Looking at your scatter plot, looking at uh your heat map and things like that. And you can then, right, this helps you because you can then say, you know what, I'm going to deploy my fibs in this particular direction, right? If overall we're bullish and we're running to the upside, I'm gonna deploy my fibs in a bullish direction and then make my moves from there, make my plays from there. And when the run to the upside is over, it's gonna tell me, right? Because I'll start getting my fibs taken out, right? So I'm gonna deploy these to the upside on the swing, right? In the short term, so I could take advantage of those moves long, right? So that's how you can use something like the quant box, right? It's that additional confirmation. It's, the beautiful thing about it is that now I don't have to look in 12 different places to pull all my fundamentals together. It's doing it for me, right? Through the software and the algorithm, right? So that's where it saves you a lot of time because you could just go get that snapshot, okay? Each and every day on that. So wanted to take a look at some of these Swissy pairs. So Aussie Swiss right? We want to take a look at that one that was requested. So that'll be the first Swiss pair that we'll take a look at. Because overall, we're moving long, right? Can't deny that. Look at that low that got parked, and then look here. And so we'll see what happens. We're moving sideways. Our stochastic on a lot of these pairs, right? They've been on some good runs, a little bit slower because of the seasonality, right? And the time of the year. But at the end of the day, the waves are still playing out. But look at that is a long run. That is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days, right? Where the market pushed bullish before we got a bearish correction, and now we're trying to get long again. Okay. So strong Aussie, we know that the Swiss franc, right? They're leading the way in regards to rate cuts. They cut rates twice so far. Okay. Now, so we'll see if we put it low in here, right? And then we just continue to push bullish. But a lot of these pairs across the board, right? We're starting to get those daily stochastics, uh, hitting our sell zone, right? And being oversold. So we may be due for a decent correction on some of these, but overall still bullish. Okay. So it's just a matter of finding that setup. So as we move down to our lower time frames, we can start to see exactly what we're talking about. Okay. We need a correction here. Okay. So that 60, 68 level, we want to see price correct eventually for us to give us a decent low price. Okay. This is what I'm talking about in relation to our fib strategy. Okay. So we know we start talking about another type of strategy, right, on Saturday with using those daily highs, swing highs, and swing lows, right? So this kind of plays into that, right? Because our fibs are just giving us additional confirmation that, hey, we're in the 80-20 zone and we need to see a correction, right? We need to see a correction happen. So if we come here, we see that we formed a swing high and we're bouncing around. Do we get this move back down, right? To the downside. Okay. We haven't gotten a lot of bearish evidence just yet, right? We got one bearish candlestick there, and then we move back up. So we're kind of ranging a bit. So you can see that the market's trying to make a decision, but we definitely need a correction to the downside. Okay, so a couple opportunities there, right? A couple opportunities to play the short, right? Or wait for that low price to get back long on this Aussie Swiss. Any questions?
Can I see where you started your daily field? I'm thinking it's probably time for me to purge all charts because I don't want I don't know why my chart don't look like yours.
Yep. I just ran it off this low right here to the
Okay, I
upside.
got you.
Yeah, I just ran it. And this is when I think I marked it up. I reset my chart since then, but this is when I had marked out with the C label here and then that D way up there. So I think it was a while ago I posted that, but I just ran it off that recent low where that trend started.
Okay, so I got the smart fib up on mine, and I got a bias to this and what I want to ask you. So my capital fib is running down. Yeah.
Mm-hmm.
And so
Mm-hmm.
I was remembering about the learnings about the staircases, about price hitting those fib levels.
Yeah.
And it looks like it's hitting, like it's making a double top right here in this area on that down fib.
Okay.
But it's been so strong. Um,
Yeah.
but looking for it to hit that 382 and see what it do after that.
After that. Yeah. So I'm with you on that. So this is where you look at your technicals versus your fundamentals, right? Um, because technically with the Fed, it has been like, right, look at that. Right. Aussie. Remember right when that Swissy, when they stepped in and they intervened the Swiss franc, right, with their foreign currency reserves or whatnot, right, and to make that Swissy strong, right, and then the Aussie wasn't doing so well. So this that made sense for that to come down, but the fundamentals since then have shifted, right? Look how we came into, see this level here, right? How we came into that level because that wicked out and came back above that 5609 level, which is a monthly level. Okay. And then just fundamentally the game changed where you had you had two rate cuts. The first one was a surprise rate cut from the S&B, right? And then we just got a second one. So they came back to back on the rate cuts, and then we got a strong Aussie, right? The fundamentals lining up for favorable odds to the point where you've even heard the rhetoric coming out of, the Australian Central Bank, the Reserve Bank of Australia, like, hey, inflation is a major concern, even a possibility of a rate hike, right? So just the total opposite. So it's been on the run, right, to the upside. So I have to respect that. So when you combine those fundamentals, and now you could just use your quant box, it's like that's telling me I which way I want to deploy my fibs, deploy it to the upside, right? So I'm with you on that. You can mark with that down fib, mark some upside targets, right? Like you said, the possibility of a double top. And then when you get to that point on the run, you have to just say in your head, like, what would cause a trend change to make this move back down over the long term? Maybe they step in, and do something with their foreign currency reserves again, right? Which they do that. You see how the Bank of Japan is always hesitant to step in, whereas the Swiss National Bank, they don't care. They'll step in and do what they need to do for the currency to work, in their favor and do what's best um, for Switzerland. So right now, the fundamentals just tell me that technically I should have these fibs running to the upside because you will get it both ways. You will get it both ways because technically you are still within that down AP boundary because the Aussie ran bearish for so long, right, to the downside. But always keep in mind on what we say. No country is going to let that currency get too low, right? Or let it get too high and price themselves out of the market, right? That's why when we come out and we look at like our monthly, our yearly, like you see that as we zoom out and we come in and we look, for example, at the monthly time frame there. Like you see, that's why we always mark the top and the bottom of the range. And you can see how we started to get real low, right? And you started to see that reverse out a bit, okay, and pick back up. Okay, so technically we were at some pretty low levels, right? To where when it pushed to its lowest level, look how quick it rejected and moved back up. And so we're kind of in that similar situation at 5609 level, to where technically it's like it's due to reverse, right? And that's exactly what it's done. So I get it, especially early on in the game. I used to be confused with that too. Like, hold on, am I overall bullish or bearish on this? And then when I started to learn more about the fundamentals, it started to give me a better idea in which way I needed to which fibs I needed to respect. Mm-hmm. Yeah. So this is running long. We want to look for a correction and a continuation on this, right? So a couple opportunities on that. Moving on to the CAD Swiss. And that's one of the things overall, Joy, that really led me to learning more about um fundamentals. This is like, man, technically it looked like things can go both ways, and it was happening to me, often, having to, being confronted with that. And so when I started to learn more about the fundamentals, that's when I was like, oh, okay, this is which way I think this market should be moving. And these are the fibs that I should be using, the ones to the upside as opposed to the downside for that point in time. So this CAD Swissy, right? So yeah, it's been running long off this current low. Now we're in a weird spot, right? So we put in this high, strong bearish candle and we're retesting that. Look at our stochastic. So what I'm going to watch is today's close. We'll go into tomorrow to see if, we remain higher than this low, right? And then what I'm going to do is I'm going to gauge, right? This is one that I'm keeping a close eye on. I'm going to gauge what happens when this stochastic reaches that buy zone again, because we could be setting up right now, okay, to put in a higher low. Okay? Here's a low. This could be a higher low. And then do we continue to get bullish from there? Right? So that's one of the things, right, that I'm paying attention to, because if I look on this 4 hour with this break, look at how this is moving. Here's our correction out of that 80-20, right? We wicked that 80-20 and came down, and then we've made the swing. So this is what I'm watching closely. I'm gonna be patient, right? I didn't take this latest move. So I'm gonna be patient on this one to see how things line up with the daily time frame on that. But that's a beautiful U-turn. I think it's going to continue to move bullish, uh, but we'll see. So this is an opportunity here on this cat Swissy. It's made the correction. We're still within the AB boundary, and we're still overall above the cloud. Right there. So we'll see how
So
this
the
one
bias is
goes.
not bearish anymore from the higher time frame.
I am right. So overall, when you look at the larger fib, right, it's bullish. See that move off this 786 level is bullish. Now the short term right move, it was bearish off the correction. You see that? But what I'm wondering is, are we going to create a new low right here? You get what I'm saying? You see how we got that center candle low?
Okay.
This center candle low. And so I'm looking at the position of this stochastic, right? Just continue to do the research. And because that was it was a huge candle, but look at how we've held up. We didn't continue lower. You see that, how that stalled? We didn't continue lower. So are we retesting this bearish candle, or are we putting in a swing low here and now we're going to continue long? Right? So that's my question. And that's a wait and see. So as I continue to do the research on these daily levels, right, this is one that I'm keeping my eye on to see exactly which way this goes. Because look at here on the 4, right? If we continue long, right, if we end up putting in a swing low on that daily and things line up, that's going to be a beautiful play to the upside. Okay? That'll be a beautiful play to the upside. But the verdict's still out on it, right? So this is just, again, new research for me, at least. And then, right, seeing how things line up on the daily and how it relates to my fibs on the lower time frame. Okay? Because right now, to me, it's going to take a lot to take that candle low, that low out, right, at this level. So I'm going to be patient, because if we do get that second candle to close higher to the right, then this is a confirmed support. And if our stochastic is back in the buy zone by that time, right, then my bias is going to be a continuation long. Plus, in the back of my mind, I'm still, right, when we look at our COT data, right, investors are extremely short on the on the CAD, but also on the Swissy. Right, the Swissy is super short. That's short, right? So 84, 86, but I'm leaning with the CAD, some of the economic data, oil. Right, I like that long. So we'll see. We'll see what happens there. And so this one is a good one for me to stay patient with, to see what we get. You look here on the weekly, right? And you can see how that's been moving up.
So Benny, if you're saying if it breaks down past this low, it's basically, if this doesn't close and stay above that candle, but breaks below that low, it'll be like more bearish.
Yeah. Yep.
Because
Yep.
the reason why I asked that, because I did throw a fib on there once price start moving. I mean, there's a sweet spot at a weekly support area at, what's that, 647, like 647, 66.
So what I'm saying is, right? So look, so think about it, everybody. Look, right? So the long-term move on this right now, okay? The long-term swing on this right now is overall, right? It's been long, right? Can we agree on that? Right? Over the long-term swing, right?
Yes.
So in essence, this is a C to D, this is really a C to D push, right? It's the way that looks, it's the way that looks, how it's shaping up right now. We come out of our buy zone, C to D push. We just shot at 78.86, right? Retracement. So we're looking at a C to D push. Okay. This here, right? What I'm talking about are those plays within the plays that we started to discuss, right? During the Saturday ritual, right? Those shorter term moves, right? People, hey, I don't that this daily play is a long-term play. I don't want to stay in that. How can I take advantage of the recent price action, the price action right now, right? So we formed a level here. We wicked out. We moved down, right? But we didn't get an immediate continuation after this huge bearish candle to the downside. Okay, so just focusing in on this price action right now, right? If this price moved down, okay, in the short term, if this price moved down and takes out the low, we would have to say that in the short term, right, that's moving bearish, right? Can we agree on that, right? That would be moving bearish, right? So if
Yeah.
this continued to move down, right, off this level and came down 60, 70 pips, right? That's moving bearish. In the short term, that is moving bearish. That price is continuing to correct, right, to the downside. So you can make plays off of that. Even though over the long term, this may hold up and continue to get long, right? So it just depends on what you want to trade. Right? Your trading style. If you're not a long-term swinger positional trader, you're gonna make your money off these shorter term moves, right? So if that broke,
Also,
if
looking
that
at structure. Looking
Go
at
ahead, Donna.
structure. No, I was saying looking at the structure there too. You got to break or retest. Price did not break above that bearish
Mm-hmm.
candle to continue.
Mm-hmm.
Bearish
Mm-hmm.
engulfing there.
Mm-hmm. Right? So this is really, I agree with you there, right? How it's come up through these levels and we broke and we retested. So this is me really just evolving as a trader and utilizing more patience, right? Just utilizing more patience, using these higher time frames, saying, okay, look at what do I like here? This is moving down. You see that? We've got recent price action on the daily moving up. Okay. Moving up. So what I need to do is just to stay patient and let it develop, right? So for example, right here, okay, this required you to stay patient and then look at the move that it made to the upside, right? Right? Over 100 pips. So just staying patient and let the market tell me, right? Let these candlesticks tell me, these formations tell me what the market wants to do next. I already know that just simple formation, my swing highs and swing lows, If this holds up after this huge bearish candle, that's a good sign that this may just continue to move bullish to the upside, right? But I'm gonna let time tell me that, right? So I'm above my cloud on the 4. I'm still within this range. I'm above my 200, right? My 50's crossed over. Okay. My weekly, I put in a swing low on my weekly, right? So we've been moving up. So do we at least move back up to retest the high, like Donette was saying, right? Um, right. So just continue to be patient, not be so quick to jump in that play. Right? The market will tell us which way it wants to go. So does that make sense to everybody? I hope so.
Yeah.
Yeah, right. So just continue to utilize patience and make. So for example, I always think like, okay, if I had to put $1 million on this trade, right? I had to put $1 million on this trade. This had to be the trade, right? And when I think like that, it calms me down a lot. It calms me down a lot. Like, oh, that looks great, but let me make sure that I do the proper analysis on this setup. Do I have to be in this trade right now? Right? If I'm wrong by staying patient and the trade takes off, right, and moves it, 100 pips in the direction I thought it was gonna go, did I lose money? No. Right? I didn't lose money. Right? I just missed the trade. Right? I just missed the trade. But I preserved my capital. Right? So just staying patient, that's one of the big things that I wanted to work on this year, and look for different ways to continue to evolve, right, in that area. So that's one of the things that I'm doing, right? So here we are on a Euro Swissy, okay? Right, so I can see where they start to come into these zones. So look here, right? Right. So things are they're trying to figure themselves out, right? Look at this, the price action. Okay. Right. Look at that. Look at my stochastic. Look at how we put in this high, right? So we rejected here. So we started bearish and we rejected, but look how we're still holding below that high, right? So now, okay, look at where I'm at 80-20 zone, right? Do we correct down to the downside? There's an opportunity there, right? So if I took this fib off and I was just looking at this here, like that, right? We can see our structure here, right? Starting to take place, how it's holding below these levels. See that? Right? See how we're over, right? We're overbought, moving into we moved into that territory. And you see how we're starting to, right, put in this high here on the 4. Okay. Look at this here, right? So we did this on Saturday where we were already starting to, right, run our trend lines through. And you see here, look at that. Right? Okay. Where are we going to be, right? That rotates back up into the sell zone. Where are we going to be, right? As it relates, right, to this daily level. See? See that? It's fascinating. Fascinating stuff. So we may be due for a correction on some of these Swissy crosses. All right. Looking at the pound Swiss. Okay. Look, right? We know that pound is bullish. Right? Look at how we're starting to struggle, right, at this monthly level. Look at these Swissies across the board. Look at the daily stochastics on these, right? So the market's trying to make some decisions. Now, what's fascinating about this is we have a monthly level that is struggling that was already existing. We've got a recent new daily high here. Okay. So here is the question, okay? Do we okay, do we start to move bearish like this? Okay? This high. Okay? Or do we stay, right? Like this. Maybe this is green. Right? And then this becomes a new low, like that. And then we get long, right? Either here, like that, or it continues to just range. And then we move, like so. Just things that I'm starting to pay attention to, right? We'll see. We'll see what happens. But right, when you come down to your lower time frames, you start to think, man, I'm looking at these other Swissy pairs. Right? It's been running to the upside for a while. We use our confirmations with our 80-20s, see how that's struggling. Okay. Maybe we will get that breakdown. And then that correction will come. Okay. Staying patient. Yeah. Here's a 1 hour. Okay. We've seen this, right, on our other Swissy pairs. Do we get this move back down? All right. So that's an opportunity on the pound Swiss. There as well. I didn't get a chance to look at this NZD Swiss. There, right? So kind of similar, right? Look at that. Look at our stochastic, right? Look at our high. Okay. See that, right? Now, this one, right? It's a little further along to the downside, right? Now, so right, do we continue to move down, right? Is this going to be our zone? It's only going to correct here to this level. And then we look to get long. But all of these Swissy crosses are in that phase where they're due to correct, right? Which this one is already, right, correcting, right? Low in the zone. Okay. So that's that. Right. So continuing You're studying candlesticks this week, candlestick patterns this week. It's huge, right? So that'll play right into what we're talking about, coming down off those higher time frames. So just continuing to evolve, right? As traders, continue to build upon, what we already know and how to just continuously refine that and get better, right? To get better, to get more precise, to become more patient, right? To the point where we're taking less trades, but we're making more money. That's the goal. That's the goal. Got to stop and profit on this
All
one.
about the
Okay.
psychology.
It is, isn't it?
Even in the
really is.
candlesticks, so.
Yep, that's true. And because you all know this, you're getting it, right? Now it's just that mindset, that psychology, like you said, sharpening up on your candlesticks. That's a great topic to cover. All right. And just continuing to get better. You guys get the ABCD ways to the upside, to the downside. You get the trading sweet spots, right? Like I said, just continuing to refine that and get better and better and better, right? And it takes time. So that's it for this morning's session. I appreciate you all hanging in. I know we went a little bit over, but wanted to make sure we got through those important things today. So everybody enjoy the rest of your day. I will be back with you all tomorrow, 6:30 a.m. Eastern Standard Time for the pre-New York session. And we'll make sure that we get things posted. Links to Jerome Powell, we'll make sure we post those. He's, with his testimonies, they usually run those live. So we'll make sure we get that stuff posted. And then we'll watch how the market moves. Have a great day, everybody.
Thanks, man.
You too. Thank you.
You're welcome.